Check, please.
Hey, welcome back to Everything Money. Today, we revisit the stock Google, the company. We'll show you the financials. They're going through a stock split as well, just like Amazon. We'll go over what makes up this company and why their stock price is what it is. Don't get fooled by the stock split. We'll use our stock analyzer to show you what you should be paying for this company moving forward. And if you can trade this with Mo, we'll show you at the end of the video. I bring you Paul and Mo and their thoughts. These guys have about $100 million in assets. And if you don't believe it, then you can join us in those Mexican vacations and the mansions on the cliffs and see all the real estate Paul owns. Paul, tell me about Google and your thoughts on this company.
So Google is doing a first stock split. Guys, I love Google. You love Google because you're watching us on a Google company. YouTube is owned by Google, the top 2 search engines in the world, google.com, youtube.com. This is incredible. They have 2 billion active users on YouTube every single month. It's an incredible service. They're an advertising business. 97 or 98% of the revenue comes from advertising. They do a great job of it. That's just the way it is. I love Google. I was offered Google in their IPO. I said it's too expensive, $65 a share. I am a moron. I mean, literally a moron. I could have bought this company for $65 a share. Guys, let's go look at Google through our stock analyzer tool, because I want everybody to remember something. And I said this in our last video about Amazon. A stock split does not make the value less. It just makes the nominal price of the stock lower. People out there, first level thinkers, will say, oh, but the stock's cheaper now. It's a better deal. No, it's not. It just makes you feel warm and fuzzy, paying less nominal price for the same value and getting more shares. If a company has 10 shares outstanding and they're worth $10, each share is $1. If they're worth $10 and they have 1 share outstanding, each share is $10. They have the exact same value. So don't fall into that trap like I used to 20 years ago and say, oh, it's a cheaper company. Actually, I never fall for it. I'm just trying to be nice.
Well, the key in investing is we want to determine what that value is.
Correct.
And pay less than and get a deal.
So when they do a split of 20 to 1 on $2,600 stock, it's going to become $130. That's it. It's the exact same. But guess what? Their market cap, if they split today, would be exactly the same. 1.745 trillion. Why? Because the number of shares outstanding would increase by 20-fold. No difference. So let's use our 8-pillar analysis to look at Google. So a very common misconception in this world is, it's actually not a misconception. When people hear the stock is splitting, they go, oh, this is great. It'll bring more buyers in. And that's exactly what Google wants. Now that the stock is going to be 1/20th, $130, somebody with $500 now can buy 3 or 4 shares when before they couldn't buy any. So it's going to lift the demand of the stock and they hope lift the share price. It's ridiculous. It's not worth it. It's just over the long haul, what will matter is the fundamentals. And these are the fundamentals. Guys, they've bought back 4% of their shares in the last 5 years. They have such little debt. Guys, I want to show you how little debt they have. Look at this, Uncle Seth. Let's go to the balance sheet. They have $188 billion in cash and cash equivalents.
Jeez.
The entire company owes $107 billion. They can literally pay off every dollar of debt and have $75 billion left over, $80 billion left over in cash with no debt. That's how good the company is financially in terms of health. They probably aren't going under. All right. Another thing, cash flow growth. They've grown $43 billion in cash flow in the last 5 years. They get a high return on invested capital. That means all the dollars invested in the business are getting a high return on investment. Revenue growth, $147 billion in increased revenue in the last 5 years. Not total revenue, increased over the last 5 years. And net income growth of $63 billion. So what are our issues here, Seth?
Well, I was talking to a 17-year-old last night about the concept of investing in stocks. And
this is interesting.
Well, when you start treating them as a business, there's a lot of really healthy things behind this business that make it great, except for that ticker price.
Except for the valuation. So right now, the 5-year PE is 45. The 5-year price of free cash flow is 46. That seems lofty. Now, with that said, if Google's able to increase their revenue, profit, and free cash flow at a much higher rate of return, it can really be fine overpaying, because if two companies are exactly the same and one's growing their revenue and profit 20% a year, the other one is growing at 3% a year, which one would you pay more for? So that's what I want us to always focus on. That's why we use the stock analyzer tool, which we'll get to, because it allows you to put those assumptions for growth in, because growth is such an important aspect of value investing. Let's go. I just want to show you guys how incredible this company is. 10 years ago, they did $50 billion in revenue. Last year, they did 257. That's 5 times growth. Look at the profitability. 10 years ago, 10 billion. Last year, 76. So 5 times revenue growth, 7.6 times more profit. Mo, you're smiling.
It's incredible.
It's insane.
It's just an incredible company.
And it's all from advertising.
Yeah.
And a great balance sheet. I love it. But I had to make sure I love the stock price.
Paul, looking forward like you were, one thing, I watch a lot of YouTube videos. There's a lot of intriguing folks out there, but you rarely say things like, when this happens in the future, and if this happens, and if they grow. It's funny how many videos I see where they give a lot of very positive ifs, which help them sort of bolster paying a price for a stock today.
Well, actually, they usually give 1 or 2 good ifs and say this is the entire thesis.
And the whole time I'm watching, I'm like, what if that doesn't happen at all? What if exactly it goes in the exact opposite direction?
And that's more likely to happen than for everything to work out.
So that's why we try to be conservative in our assumptions, because as Mo said, it's more likely that we don't hit those really rosy assumptions. Be conservative. Be conservative. You'll be happy you did. Now, the market's very hot right now, so it's hard to be conservative and find good deals. I get that. But Google should be on your watch list. And here's the great thing, guys. Our software has the watch list. You add it, and then you can add a notification for what price you want to look at it at. Guys, so this software was created. You guys asked, we delivered, we made this software. We made everything you guys want. We're adding more every single month to it. Look at everything you get. 8 pillars, retirement calculator, stock analyzer tool, 8-pillar portfolio, the watch list, exclusive video content on our app and desktop. So this has a whole app version as well. Every day we give you videos just for YouTube, for you guys. On all these things right here coming soon, all including the software. But the biggest thing you get of all of this is this EM community chat. Over 6,000 people in there talking about all these investments. Guys, it's a lot of work to research stocks. But when you have 6,000 people with you and growing, and when we have 50,000 in the future, you'll be able to sit there and say, hey, who's buying Google? There's a search function here. You can look up Google and go right to the conversation about Google and start asking about Google. What are you guys thinking? What are you doing? What are you looking at? It is absolutely brilliant. Guys, this is all for $1 per day. 2 ways to sign up, everythingmoney.com and Patreon. You pick it. Patreon's for the international people, but $1 per day. If this can increase your returns by 1 or 2% or decrease your losses by 1 or 2% per year, it'll lead to hundreds of thousands, if not million. $1 per day gets you the data, tools, and community that you need to make better investing decisions and more money.
So, Paul, this was always a confusion to me. All this sounds great. What do I pay for this stock?
Okay, so this is where we go to the stock analyzer tool. Here's where we make the assumptions about the future. Now, revenue growth is the first assumption. Over the last 10 years, they've had 20% revenue growth a year. I do not assume those big numbers. I want to be conservative. I'm going to go with 6, 9, and 12%. Profit margin, I'm going to go with 20, 22, and 24%. Free cash flow margin, 21, 21.5. Nope. I'm going to go 20.5, 21.5, and 22.5. PE, this is where I'm going to get a lot of flack. Guys, the bigger the company, the lower the PE, because the lower the revenue growth numbers. That's just a fact. So I'm putting 13, 15, and 17 in for PE and free cash flow. 12.5% return provides you with your margin of safety and gives you a reason to buy a stock versus doing an ETF. I hit the analyze button. Guys, very simply, here are the price ranges. 1,100 to 2,300 or so, with a middle price around $1,600. Sound too low? Guys, just go look at the prices of all these stocks when they're bear markets. They plummet. Peloton's down 80%. All these companies, even great companies are down a lot. The whole point is there will be a time when the fundamentals of Google get better, the price comes down. And the great news is, if any of one of these you want to have a notification for, just hit the plus. Add to your watch list at that price. Type it in. So I hit the plus button, goes to 1632, hit notify me, boom, done. And I'll be notified on my phone and through email telling me, hey, Google has it's gone below your price. And that's it.
If you're interested in trading the stock at a quicker pace, you can join Mo in the Bidnass Nation and he'll guide us. Paul and I have been day trading in the mornings and losing money currently and loving it. But Mo, show us what's going on over there.
So this is a long-term chart on Google. Google's a good stock because you can catch a great long-term trend. And look at what this thing has done since March of 2020. Now, you notice that it is just kind of sitting here and it kind of has been stuck in this range. I do think that this thing is going to continue its downtrend over the course of a year. It'll move up and down, but over the year, it'll just start to drop with the rest of tech. That's the great thing about Google. As the market falls, this is one of the fangs. It's going to fall with the rest of the market. So this is a great opportunity to catch some of these downtrends. Come and learn how to short with me. It's going to be very important when you need it. I mean, during COVID, I was shorting like crazy, and it was just so much fun.
Mo, let's be clear, because I see other YouTube pages doing this. When you say you think, you're really saying you're following the trends and these rules. This isn't like something you just come up with.
Making things up in my head. I'm just looking at it saying, okay, well, this company has just sat here and consolidated for a while. It can go higher or it can go lower. What is happening right now in the market?
Well,
what's happening with the fangs?
Not
Everything's
a lot of good
so
stuff.
overpriced.
Yeah.
So, and then I look at my trends and I say, okay, this was overbought for a very long time. If I go back in history, after a very long run, you're probably going to see
How long is
a lot
that
of
run,
trend.
Mo?
This one? This is from November of 2020 through, I'm going to say December.
Of 20, it's over a year.
Over a year.
And I want to make note, how many channels on YouTube talk about the good news of stocks going down? So I hear this and go, just be patient. Just be patient. I'll be able to buy Google at a much lower price that makes more sense.
So if you were to follow my rules of trading, all you're doing is, like I said, you break in, you get a buy signal when you're moving through the sweet spot, you stay in it, and you exit when your red line drops below yellow. You would have bought around 16.21 and exited at 27.27 a year later.
Good Lord.
That's trading. And a lot of you that are in the Bidnass Nation, you see me say that back in the day, you used to be able to find stocks where you can stay in for multiple months. This is a stock that we found today that you could have stayed in for a year. And when you do long-term trading, there are opportunities to stay in stocks for a year. There are not so many right now, but we will get back to that point. That's why it's so important to learn how to do it.
So just to clarify, you're entering when yellow goes over red.
When red goes over yellow.
Red goes over yellow in the sweet spot, and you exit when it goes back into the sweet spot and the same thing occurs?
You go when your red line drops below that 80% line right there.
Oh, just when the red line goes below the 80% line.
That's when you technically now have a downtrend and you exit your position.
And by the way, you would have exited and felt stupid because the stock then went to...
Kept going.
Yeah.
Over $3,000 a share.
And you'd have been like, oh my God, I missed out. No, you didn't.
Happens.
You're fine. It's going to happen. But the point is...
You're not going to catch everything. You're not going to lose everything.
But you made 70% of your money in a matter of 1 year.
Exactly.
Just by, had nothing to do with fundamentals. And that's the great thing about the channel is we're able to sit there and make money in multiple different ways.
We will update you and make another video when the stock does split, of course. And when you put it on your watch list, you'll be ready to buy. Incredible, Paul. You know, I love that watch list, and the community members are on fire about how useful it can be moving forward. Because I can't keep track of all this stuff. You know, we do some of these stocks. I want to put on a watch list. I want you to let me know when I'm ready to buy. So very interesting. We'll see you next video. Join the community. Get the software. You will love it. Final thumbs up. Subscribe. See you next video.